Hey everyone, this is Corey with Sims Investment Management. This is another monthly market update. And this month, let's focus on the recent market volatility. Again, I hate using the word volatility just in the sense that it gets kind of overused in the media. Volatility is market movements down and up. It's not just a negative volatility, even though that's what we're experiencing right now. So there definitely are a lot of overhangs in the market, right? So you could talk about investors being concerned with the Russia-Ukraine crisis, being concerned with inflation, being concerned with just the political landscape that's coming up, and then certainly oil prices. To me, I think it could be very easy to see the market potentially reverse course with the recent pullback if just one of those kind of gets solved or sorted out. With the market down about 18% right now, May 12th, when I'm recording this video from the high that we had in January, I personally think that there's way more upside potential from here than we continue to see downside pullback. Every 12 to 18 months, we see this type of market pullback. It's completely normal. We've seen this for 100 years. But every time it's usually a little different. And one of the things I'm going to include in this month's newsletter is just since 2000, all the things that really have caused the market to get spooked in any different calendar year. And I'm sure there's more than what's on this list, but it's just a constant reminder that the market has seen volatility and fear before, but yet I think what happens is people forget what the stock market is. The stock market is a collection of businesses and companies. And just like many of you that are watching this video probably went to work today and were productive and contributed to the economy to progress it forward. So the S&P 500 are the 500 largest companies. And it's sometimes we get this question in here, well, I don't want to lose all my money. And I kind of have to remind them, for you to lose all your money, all 500 of the largest companies would all have to go out of business. And if we think about it, if Procter & Gamble and Johnson & Johnson and Kroger and Marathon Oil, if all the 500 largest companies are all out of business, the world is over, right? It's Armageddon. And even this concern of, are we going to have a quote-unquote nuclear war with Russia? Not to put it lightly, but if that would happen, money doesn't do us any good anyways, right? So I put the odds of something like that happening very, 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 very low. But it is a great way for the media to instill fear and sell newspapers and ad times and clicks, right? I also want to touch on the point that if you look at what the market's doing right now, we're just back to where we were 14 months ago, right? Right where we were in earlier 2021. You wouldn't have had the gains that you've seen in your investments over the past year had we not been allocated the way that we had to have you allocated. So we're just giving some of that back. I also keep trying to remind clients that if you're getting close to retirement or in retirement, we have your assets positioned with a short-term conservative bucket of money, we have a moderate bucket of money, and we have a long-term bucket of money. Your short-term conservative bucket of money is not the bucket of money that you're really seeing going up and down right now. It's pretty stable, right? It's more the mid and long-term buckets that you're seeing move around. If you're not close to retirement, you have many years to it, well then the fact that we're able to buy investments right now at an 18 to 20% discount, 30% on some of the tech sector right now, is a home run. Just like if you go out and you want to buy new appliances in your house, let's keep gobbling those up at 20 and 30% discounts. I want to shift gears a little bit right now because that kind of dissects some of the market, but let's talk about how good some of the things are, right? American consumers are basically debt-free in the sense that there's about $2.5 trillion in cash in the consumer's pocket, and yet that puts household debt, excluding your mortgages, basically at zero on average for the American consumer. It's the strongest the American consumer has been in 4 decades. Businesses are flush with cash. If you add in business cash, I think we're over $4.5 trillion in just cash sitting on the sidelines. So that's very favorable. We're not seeing earnings expectations drop for this year. So even though we're having a market pullback, we're not having earnings recessions or earnings drop. In recessions, if we think about recession, it's this big scary word, but all a recession is 2 negative quarters of GDP growth. It can be as small as 0.1% and 0.1%, and that would be considered a recession. You could, in theory, have a recession and a positive GDP growth year all in the same year, and we've seen that before. So take a little bit of comfort to that. The last thing I want to touch on is inflation. If we've seen inflation peak in earlier this year, the signs are pointing to that, but even inflation is misunderstood in the sense that people don't necessarily understand how it's calculated. They mostly just look at the headline numbers. So for instance, 30% of CPI, of inflation, the Fed's preferred way to measure inflation, is made up of household rents and rent equivalents. So essentially what it costs to live in a house. And rents were artificially depressed and kept lower during COVID because of the eviction moratorium. So we had to take a step back, and now rents are essentially catching up to the house prices, the growth that we've had over the past 2 years in house prices. Rents couldn't take that same step forward. So a lot of inflation we're seeing right now is just housing rents catching up from what they weren't able to do the past 2 years. That is a big proponent of inflation right now. Car prices are a big proponent of it. Energy, obviously, and food. But cars are going to work themselves out. Rents aren't going to rise the way that they are, and home prices aren't going to rise the way that they are forever. And hopefully we'll get some relief from oil prices too at some point. So all is not dire, all is not lost. I know this is a longer video this month, but there was a lot to cover with everything going on. If you have any questions about this, or if you think this would be a helpful tool to send to somebody to teach them as well, please share our information or reach out to us with any questions. Thanks, and we'll see you next month.